What's going on, guys? All right, I'm over at the CME group. I'm looking at the Fed Watch tool. It shows the probabilities of a Fed rate hike based on contracts traded at the CME. And the probability of a Fed rate hike, according to market participants, is close to 80%. And Janet Yellen has even hinted that, yeah, we're probably going to raise rates. That being said, what does this mean for other assets like gold, silver, etc.? And I want to show you this graph, and it's from the TF Metals report. Turd Ferguson, I used to interview this guy back in the day when I used to interview a lot of these gold and silver guys. And he made an observation which I've been talking about, and I stated that rate hikes are actually bullish for gold and silver, and it will usually lead to a weakening dollar. Now, we haven't seen the weakening dollar, but you should look at this, for instance. November or December of 2015, Janet Yellen raised the Fed funds rate 25 basis points. You saw gold go from like 1045 to around the Brexit high of around 1370-ish in late June, early July. Then you had a naked short position in gold, probably the largest out there by the commercial money, and huge open interest by speculators. And then a negative yen position, or a lot of commercial money were short the yen, and the smart money was right again, even though they were a bit early. You saw gold prices go from 1380 to around 1115 at the low in December or November. I don't remember. This is a few months ago. And I was talking about gold when it was like what 1220 in November or 1200-ish. I was talking about, hey, gold seems to be attractive at this point because the FOMC, they're going to raise interest rates. And you did see this move from 1115 to around 1260. Now, you have to look at the fact that gold has gone down from what 1260 to 1235. It went as low as 1227-ish on Friday. And then you saw Janet Yellen make a headline that, hey, we're going to most likely raise rates. So you saw gold react to that and went to 1235. Now, what we've seen as a pattern before the Federal Reserve raises rates, gold has been shorted heavily. Gold has been shorted heavily. We did see a top at 1260, but now you have to ask yourself, if is gold going to go down even lower from where it is right now? Just as a knee-jerk reaction by traders. And if it does go down, the initial move, like a lot of speculators want to do, this may actually be a good buying opportunity right after the Federal Reserve raises rates, assuming that gold prices get knocked down from here. And if they do get knocked down from here, I'd buy because the Federal Reserve is most likely going to raise rates. If they're not going to raise rates, then I wouldn't buy at this moment. You see the smart money in the futures market, the Japanese yen commercial money, they are still net long. They haven't added too many short positions. So they're betting that gold prices are most likely going to stay up. They're not going to go down significantly based on the positioning sizes that I've been seeing in the futures market, especially for the yen. I think the most important part to look at for gold is the Japanese yen. Correlate, correlated to the price of gold, in my opinion. So, that being said, this rate hike that's going to be coming, I would be looking to buy gold and silver, assuming that the price gets knocked down. Now, if it doesn't get knocked down because of the same pattern happening over and over and people figuring this out, then who knows? it may not work out like we saw before. But that being said, I still feel comfortable with the price of gold and silver going higher, assuming we get this rate hike. And if you want to look at other things that TF Metals report said, or Turd Ferguson, he discussed how in 2003 to 2008 you had, or 2007, 2006, there were rate hikes during that time. And what happened to the price of gold? It went up. Now, right after QE, gold didn't go anywhere. It actually got knocked down. Initially went up from like 2009 to 2011, but from there, right, price of gold went down. Some people will say it's manipulation, this manipulation. That I used to always talk about it, but we have to interpret how the price of assets work in this current paradigm. And I'm always going to say that raising rates is actually bullish for gold and silver and bullish for inflation. And the other thing out of this is that if you look in the 1970s, you had higher rates. And that also led to more and more inflation until Volcker decided to raise the Fed funds rate way above the market rate. And then you had rates fall, dollar rise, and we know the story of how that happened. I don't think there are a lot of people in the gold and silver community talking about rate hikes being bullish for gold and silver. The only one that talks about it is Don Harold, but I don't think he does videos anymore. Or he does videos once in a while, and then there's TF Metals, and then, yeah, there's me, but I'm a nobody in this gold and silver community anymore because I'm doing my own research. But, anyways, guys, leave your thoughts below, and I'll talk to you later. Bye.